Hello, if you're watching this video, I hope you're watching it from my Monday-Wednesday section of Accounting 308, 508. I have a confession to make. I completely forgot to cover two parts of the statement of cash flows. So as we were talking about our financial statements for problem 14.5 part 1, where we've got the amortization of the discount of the bond for Stanford, we talked about the balance sheet at 12/31/2020, 21, 22, 23. We talked about the income statement, recorded interest expense for all these years. We also talked about the statement of cash flows, and I did two of the parts, and like I said, I just completely forgot. It slipped my mind. I totally forgot to cover two other parts of the statement of cash flows. So we recovered the borrowings and the repayments, and we covered the amount of cash paid for interest during the year. But we forgot two other parts. They both have to do with the operating section of the statement of cash flows. So if you look back to your journal entries, you will note that at 12/31/2020, when we did our first accrual of interest at the end of 2020, is the first time we put the 16,667 on the books as an interest payable. So we recorded interest expense, we recorded a portion of the amortization, and because we hadn't yet paid the interest, we recorded 16,667. So that is an increase in our interest payable. That's an increase in a current liability. If you think about what you do in the operating section of the statement of cash flows, you start with net income, you add back non-cash expenses, and then you add back changes in current liabilities and subtract changes in current assets. And so what I forgot to do is mention that this increase in interest payable is an increase in a current liability. It is an interest expense that's greater than the actual cash outflow, because the interest expense is obviously expense in the period, so it's going to make your net income lower, but the cash didn't flow out. So in order to reconcile beginning and ending cash, we need to recognize that in 2020, we had an increase in interest payable from 0 at the beginning of the year to 16,667 at the end. 2021 and 2022, we started both of those years with the prior accrual on the books, so the interest payable is on the books, and then we ended the year with the same amount of accrual, so there was no change. Both those years had a beginning and ending balance of 16,667, so that change would not show up on the statement of cash flows. In 2023, we're going to start the year with the 16,667 accrual. By the end of the year, we'll have paid off the bond, paid off all the interest, and so there's no more ending payable. So it's a decrease in a current liability for which there was not a corresponding expense during the year. And so our 16,667 is a decrease in interest payable, so it's going to show up as a reduction in cash from operating activities in our operating section. So in that section of changes in current assets and liabilities, this would be a decrease. So that's the first part. That's the one that you've already sort of seen. You've seen increases and decreases in payables as you've covered the statement of cash flows. The other piece is a little bit more subtle. So if you think about your statement of cash flows, you start with net income, and then first thing you do is you add back non-cash expenses like depreciation. Well, why do you do that? You're starting with net income, but anything that reduces net income but doesn't have a cash outflow piece, you want to add that back because you want to get to cash flows. So one thing I totally forgot to mention is amortization, not only of intangible assets, but also of discounts on bonds payable. These things are going to show up in your statement of cash flows. So if you think about what we did in 2020, we recorded interest expense of $47,342. Now, how did that interest expense show up? Well, $25,000 of it was a cash outflow because we actually paid that in September. $16,667 was interest payable, but those two numbers together only add up to $41,667. They don't add up to the entire $14,732. So where's the rest of that interest expense coming from? The rest of that interest expense is non-cash interest expense or amortization of the discount. Again, remember that the interest expense is higher than the cash payments. We have a discount on the bond, which means the interest expense is higher than the coupon rate. The amount of interest we book is higher than the amount of interest we actually pay. How do we reconcile that on the statement of cash flows? We have to take the amortization of the discount and add that back as a non-cash expense. So again, take a look at this example. So take a look, well, we'll do this one from 2020. So in September 1st, 2020, we recorded $28,325 of interest expense for the first 6 months, but we only made a cash payment of $25,000. So that $33,225 is a non-cash expense. So just like depreciation, that non-cash expense gets added back. Same thing here, 19,017, we recorded 19,017 of interest expense, but we're only planning to pay 16,667 of cash on that. So that difference is 2350. So that's a non-cash expense. So in our operating section, both of these guys show up in our operating section. In our operating section, we've got to add back the amortization on discount. Same thing, so we can do that for every year. So in 2021, we had these 3 entries that affected our discount. The sum of those 3 entries is going to be the amortization of bond payable for amortization of discount for the year. In 2022, again, we made 3 entries, March, September, and December. The sum of those 3 things is $84.85. That's going to be an add back in our 2022 statement of cash flows. And finally, in 2023, we have $61.99, which is the sum of these last 2 numbers. And again, I'm probably off $1 from what we did in class, but that's we need to record that as well. So both of these bottom things here show up in the operating section. I completely forgot to cover those. I apologize for that. If you have any questions or comments on the statement of cash flows, please let me know. Thanks very much for watching.